You're listening to the Real Estate Proverbs Podcast with host Kevin Jefferson. This is the number one podcast for African American real estate professionals who are doing extraordinary things. It's time to tune in. And now, your host, the People's Lender, Kevin Jefferson.
Hello, welcome to Real Estate Proverbs Podcast. I'm your host, Kevin Jefferson, and today it's just me. I am the guest. So what we're going to talk about is how to get pre-approved for a mortgage from the lender standpoint, right? So what we're going to do is I'm going to walk you through the process from my initial conversation with you as a buyer or with your client as a buyer all the way to the end, meaning we're going to get to where we're closing on the property. All right. So initially, the borrower comes to me and they say, "Hey, Kevin, I'd like to get pre-approved to purchase a home." So at that point, I begin to ask a series of questions. My initial questions are, have you qualified? Have you filed for bankruptcy or been foreclosed on in the last 7 years? And if so, which type of bankruptcy or when? Once we get past those questions, the next question would be, you currently know what your credit score is. Now, typically they say, yes, Kevin, I looked at Credit Karma, looked at my FICO or whatever credit resources they have, and they give me a score. And I explain to them that the score that they see in that app or on that website is not the score that I'm going to see as a lender. So, I just kind of get that question. I ask that question just to kind of gauge an idea of what their actual scores could be. On my end, when I pull credit, I typically can see a higher credit score or I can see a lower. It just varies, but it gives me an idea of where this person is at credit-wise. The next question is, are you currently employed? I see if they're currently employed just to get an idea, of course, obviously their finances. Do you have income coming in? Or if you're not employed, are you self-employed? Meaning, are you self-employed? Do you run a business? And if you run a business, do you have 2 years of tax returns and bank statements that we can take a look at? If you are not employed and you receive some type of disability, Social Security, or something like that, then I ask, is it permanent and is likely to continue over the course of the next 3 years? Because then if it continues over the course of the next 3 years, it allows for me to be able to carry that as their income. The next step after that is I tell them that we go to application, meaning I send them a link to the online application where they can go in and input their information so that I can pull credit. I want to make sure that not only are they financially set, but is their credit score at the scores that we need. I ask if you have any credit freezes or any locks. If so, could you please lift those? Because that does not allow for me to be able to pull credit so that I can, in fact, get the credit scores through. So once I send them the email with the link to my online application, they will fill out the application. It notifies me when you open the application. The system also notifies me when your application is complete. That way you don't have to say, "Hey, Kevin, I'm done the application." Clients still do, and that's fine, but I know because I get notified. Once I'm notified, myself or one of my team members will go pull the application, pull the credit, and see where the credit score is. Now, for me, I'm looking at I'm looking at liens and judgments before I go to the actual. I want to see if there's anything that's not released or satisfied that could hinder you from purchasing the home. You could have the 700 credit score, But if you've got liens and judgments that we can't satisfy or that have not been satisfied prior to us getting a closing, then we need to work on those items first before we even go any further, right? So I look at the credit report and I say, okay, you don't have any liens, you don't have any judgments. Let's go to the actual credit report. So when I get to the credit report, I'm looking at collection. I'm looking at, do you have collections that are non-medical collections that total above $2,000? If they total above $2,000, we need to address those because we've got three options. If they total above $2,000, we can A, pay them off until, or pay them down to where it's below $2,000. I'm also going to see if you currently have a payment arrangement set up with any of these collection companies, because if so, and you've made 3 on-time payments, we have the ability to use that on-time payment into, well, your payment into your debt-to-income ratio, and that will allow for us to help qualify you as well. Or if you don't have those two previous options, the third option is to use 5% of the balance as a payment in your debt to income ratio. So then we get over the fact that you have these collections. They have to be addressed if they're over 2,000, and I mean collectively. So if you've got 5 collections and all of them are $500 a piece, that puts us at $2,500. So we need to pay down one of the collections so that it gets you, well, 2 of the collections and get that balance down below $2,000, or we do one of the other options. But there, so in saying that, you can have collections and still be able to purchase. We just have to handle them a different way. Once we look at the collections, then I look at the medical. So I look at the medical. However, we don't have to count any of the medical bills into consideration into your DTI, or we don't have to do anything. We can just overlook those. Now, what I do look at with the collections, depending on the type of financing you get, I look to see when the collection came on. So if you are doing conventional financing, you can't have any liens, judgments, collections, or anything like that in the last 12 months that have hit your credit. You can't have any late payments either. So when I look at the medical bills, I make sure it has not come on in the last 12 months. After I've assessed that portion, then I scroll up to the top to actually see what your credit score is. Depending on the program, the credit scores requirements are going to vary. So with FHA, we can do a 580. You're not going to get the most favorable terms. There's going to be some hoops that you're going to have to jump, and it could make for a difficult file to do. It can be done. I have done them. It can be done, but you're definitely going to need your own funds for down payment and closing costs, and you're going to have something called reserves. Reserves is equivalent to 1 month of the principal, interest, taxes, insurance, homeowners insurance of the property. So if your monthly payment is $950, and it requires for you to have 2 months reserves, so then you have to have approximately $1,900 in essence of you paying your own down payment and closing costs. Now that $1,900 does not have to be given at closing, but it has to be available to you. So it can be in a savings account, in a checking account, in a money market account. It can be in a retirement account. We just need to see if you have the ability that if something happened to you and you needed money for a mortgage payment, do you have the ability to get liquid cash to make those payments? And that's all we need to see. Can he or she pull it from their 401k? If you can, we're good to go. We just need to show proof to the underwriter that Mr. and Mrs. Buyer does have reserves. This is where they are. And that helps strengthen your profile when getting pre-approved. In terms of the actual credit report, besides that score, I'm looking to see if you've had any late in the last 12 months. If you have had late in the last 12 months, if you're going through FHA, it's going to be different. We can use late. However, the higher the score, the more likely you are to get approved with those late. The lower the score, the less likely you are to get approved with 30-day late, 60-day, or even 90-day late, however many lates you are. I'm also looking for student loan debt. I'm looking to see how your student loans report on your credit report, because it's going to also make a difference. And I had that conversation with you after I've reviewed the report to ask about your student loans. We then look to make sure, I'm looking to see what the buyer's profile looks like. I just from doing it so many years, I have the ability to take a look at a credit report and kind of pick it apart to see what things would hinder us from potentially getting approved, and figuring out what I need to advise the buyer to do to help strengthen their ability to purchase. Meaning, do we need to increase your score? Do we need to pay down some of these collections? Some of these credit cards. Is there questions pertaining to late payments? We're just kind of analyzing that credit report to make sure that you, as the buyer, are in the best position. Now, this is before I even run anything or get any documents. I'm looking to see, do we have any hiccups that will stop us from getting an approval based off of the program that you ask that you want? Now, when I also look at it, I'm looking at the file, and in my mind, I'm like, okay, they say they want to do USDA. However, because the way their profile is set up, FHA may be a better bet, just simply because FHA is a little bit more lenient on the credit profile than USDA or conventional financing, and even in some cases, VA. So I'm looking to make sure the credit report is intact, or what's there that could hinder us, so I can then relay that information to my clients and go over it with them to make sure that the information that is reporting on their credit report is accurate. And it's not always accurate. There are times there are 30-day lates or lates on a credit report where the person has to contact the creditor and get it corrected. Huge example, I had a client who had lates last year on their student loan debt from March of 2020 to, I believe it was June of 2020. Well, we all know during that time, nobody could be late because student loan payments were not due, and these were government student loans. So he reached out to a student loan servicer, got those lates corrected, and that increased his score to the 700s. So those things right there are essential, because if I didn't look at the report and I did not tell him what was going on and tell him exactly what to do, he would have been hindered, or it could have affected him from purchasing a home. So those are the things that I do when I'm looking at the credit report. Once I've completed analyzing the credit report, there's a couple things we can do. So if the borrower has the scores that we need or they're close, I'm going to reach out to them. I'm going to send them, or my team is going to send them an email asking for supporting documents. And these documents are 30 days of most recent pay stubs, 2 months of most recent bank statements, all pages, all accounts that you have that you want to use your finances in. The 2 most recent years of W-2s. So in case of this video, it's 2020 and 2019. 2 most recent years of tax returns. In this case of this podcast, it is 2020 and 2019, as well as a copy of your driver's license, which is not expired, a copy of your social security card. And if you can't find your social security card or you don't have a driver's license, you can also, a third option is your passport. So we want to make sure that the person that's applying for the job, applying for the house, is the person, in fact, who's supposed to be, because we're going to match it up with their ID. Um, just a few other items that we're going to ask for if you're looking to, if you already own a home and you're looking to buy another one, we're going to ask you for your most recent mortgage statement so we can verify that. And if you're currently leasing a property, leasing that property or leasing your property, then we're going to ask you for the a copy of the lease with your tenant so we can potentially see if we can use your rental income to help you offset the initial mortgage payment that you have, right? So we reach out and get those initial documents. There's other documents that we're going to ask for. If you've been in bankruptcy, we're going to ask for your bankruptcy paperwork. If you have um, child support you receive, we're going to ask for a court order, copy of the child support paperwork, award statements for your Social Security, disability. If you're applying for VA financing, we're going to ask for your certificate of eligibility. And if you don't have your certificate of eligibility, we're going to ask for a copy of your DD 214, which will allow for us to take that and request a copy of your certificate of eligibility, or some people call it COE. Once we have those documents, then I look at everything. Once you send them all back in. Now, the key point, and this is important, is submitting all of those documents as soon as possible. If you submit those documents as soon as possible, that allows for us to get on the loan as soon as possible. So I typically tell my clients to give me time to analyze everything and give you your best opportunity to get pre-approved. Give me 48 to 72 hours. The 48 to 72 hours it starts once you've given me all documents. Some people don't have the ability to send everything at once, or they're looking to find things. So they could send bank statements one day, pay stubs the next, W-2s the next. In doing that, your 48 to 72 hours does not start until I have all documents. The reason why is because it's not efficient or effective for me or you to keep going in the file as you send in things, as opposed to doing it all at one time. That works for a better and faster result. Also, when it comes to the tax returns, we need all pages and all schedules, and we only need the federal tax returns. We don't need the state tax returns. We just need the federal tax returns, all pages, all schedules. Then from there, once I have all of your documents and I look at it, I enter it into my system called Encompass. I calculate what your income is based off of your the bank statements that you get me, the pay stubs that you've given me, as well as any other documents you give, whether it's alimony, child support, Social Security, military, disability, whatever income you have, I enter. Now, something that I run into is people having multiple jobs, and I want to explain that situation while we're talking about income. So, in order for me to count 2 jobs, you have to be working on both jobs simultaneously for 2 years. So, if you work at Jefferson and Company as your full-time job and you've been there 3 years, and then you work at Kevin and Company and you work there part-time and you've been there for 2 years, that's fine. That works. You've been at both places working there the same time for at least 2 years, even at one longer than the other. We are able to count both incomes, right? As long as you're still working there. If you've been at Walmart for 3 years and you just picked up a job at Kroger for 6 months, we don't have the ability to use both of those incomes because you don't have a 2-year history of working both of those jobs at the same time. That matters in no matter which financing you get, whether it's FHA, VA, USDA, or conventional. You need to have a consistent history of at least 24 months in a position on a job, meaning you have to work them simultaneously. And you have, because what that allows for us to do, we see a consistency of you having the ability to purchase a home with two incomes. We don't want you to have a full-time job, and then because you know you're purchasing a home, you're trying to qualify for more, but you go get a part-time job and you only work it so you can qualify for higher amounts. Um, so once I've, went through that scenario with you and looked at everything, then I put in the assets. I tweak the numbers just to kind of see how much you can qualify for. And I also select the program. Now, once I have ran it through our system and got an approval, denial, a refer, whatever it tells us, then I reach out to you as the client and I let you know where we're at. I go over the numbers to say, okay, you've been pre-approved for $250,000 using FHA financing, and this is what you need to bring. You need to bring a total of $20,000 to closing, and then in that instance, if you don't have the funds in your account and you say, okay, I'm okay with it, then I need to make sure that we know where your funds are coming from. Now, when you need funds to close, you can get a gift from a family member, mother, father, aunt, uncle, grandmom. Um, you can get a gift from them, as well as pull funds from your retirement account. You can have the funds in your bank, whether it's checking or savings or money market. The other thing is it can be a combination of all. You could have your down payment however you need, or your parents want to help you contribute to the deal and they want to give you some funds for closing costs. So then you could also get funds from closing costs from your parents. And then if there's any left over that you need to get, you can also pull it from your 401k. There's multiple ways to come up with the funds for closing and down payment. It's just a matter of us knowing where those funds are coming from. Something else that is key, and I want you guys to understand, is we want documentation of where all of these finances came from. So if your parents or some family member is giving you gifts, then you need to make sure that you let them know, mom, dad, or whoever it is, that they're going to ask you for 30 days of a full bank statement showing that you have the funds to give me for my closing. That is some people say it's very intrusive, but we need to know that nobody inside of the transaction is funneling money to the borrower to make it look like they're giving a gift so they can make it close. We need to see that that person legitimately has, let's say, $6,000 in their account that they're going to gift to the buyer so they can help close on their home. Alongside of the gift, alongside of the bank statement, we're going to send you a form called a gift letter. The gift letter will have the person's name, who's the donor, who's receiving the money, the relationship that they have, as well as the name of the bank and the account number, or at least the last 4 or 5 digits of the account number, and how much they're gifting to that person. Not only will they have to provide all of that information on that form, it needs to be signed by both the buyer as well as the person donating the money and they. So we take that gift letter, we take the bank statement, and we upload it to the system so that when the underwriter looks and the processor looks to see where the funds are coming from, they see that there's a $6,000 gift being given to the buyer from a family member, and then also the buyer has his or her own funds, and the remaining they will be getting from their retirement account. All of those things showing your financial ability to be able to close on a loan will be documented, and there must be a paper trail. People get upset because it's their money. However, you just have to take in consideration the underwriter is not going to have a conversation with you like I am or one of my other support team members will to see where you're getting your funds from. When they look at the file, do they have the money? Do they have the credit? Does the house appraise? Can we legitimately give them, lend them this $250,000 so he or she can purchase a home so that we give ourselves the best opportunity not to get this house returned to us because the person can't afford it. So once we figured out where the closing costs and all that stuff, all those items are coming from, then after we've gone through what programs, what processes, what all that we have entailed or what we need to do to create a smooth transition into home ownership, then I will issue a pre-approval letter. The pre-approval letter just states that it's got the date, and it states that how much you're pre-approved for, who you are, what program, and it has some other verbiage on it. I then email a copy of the pre-approval letter as well as the estimated cash to close worksheet, which tells us how much you'll estimatedly need to close on the house or settle on the house. And I will email a copy of that letter to the buyer and their realtor, who is the person that's going to show them the house. Once they receive that letter, then in fact, you can go out and start taking a look at houses. Once you have identified a home that you would like, and the realtor shows you the houses, not the lender, your real estate agent, trusted professional, they will show you the houses based off of a consultation they've had with you, saying that, you're looking for 3-bedroom, 2-bath house with a basement in this area. So that's how they do their search. We'll actually talk about that in a later episode. However, once you and your realtor have identified a property, you put a contract in on it, and it's been accepted. It's accepted by the seller, and all parties agree to all the terms and conditions. Then we will get the contract sent over to us from the realtor, and this is where the real work begins. And when I say the real work begins, because now we're under a time constraint. Certain things have to happen within a certain time limit in order for us to be able to close within the set time frame. For the purposes of this podcast, we're going to be using 30 days. 30 days is when we are going to close. So I get the contract from the agent. I then pass along the file to my loan officer assistant. My loan officer assistant will reach out to the borrower and get updated items, pay stubs, bank statements, some documents that may have came up during the conversation that we didn't know about, where something may have changed. So we're going to get all updated information and all pertinent information. Once she receives that and the file is set up, then we will go to sending the file in for what you call disclosures. Disclosures is where an application is sent to you based off of the information that you provided when you applied in the beginning and the information that you sent to me as well with the funds to close bank statement. So it's essentially your application saying, hey, I am ready to buy 123 Main Street. Let's go. We disclose those documents to you. Now, something that's key. When we disclose those documents to you, that does not lock you in to purchasing that home, but it gets the process moving because we're under time constraints. So we have to make sure things are moving fluently and smoothly so we can get to the end, which is closing on the home. Once the disclosures have been sent within a certain period of time, we need the borrower to review them, and to electronically sign them. They're going to be sent to the borrower electronically, so we need them to sign them and submit them. Once we have the disclosures back, then the file goes to setup. What setup does is they order the verification of employment, they order the appraisal, and they request the title from the attorney's office. Those things are done in setup. Setup order those so that that information goes out to third parties and it gets sent back to us. Now, the appraisal is ordered through an appraisal management company. So we as the lender, and neither do your realtors, know who is going to be the appraisal on the file. Us as the lenders, we don't know until the appraisal comes back. Now, the way the appraisal works is typically it takes between 5 to 7 business days to get the appraisal back. We order the appraisal in the setup process, but we also make sure that the due diligence period well, or you've had your home inspection, because we don't want you to pay for an appraisal and all of a sudden you've paid for a home inspection and the house is not going to it's not up to your standings and nobody can come to a meetings of mine. We don't want to waste your money. So some people say, hey, go ahead and order the appraisal, and I say, hey, when is the due diligence period up? When is the home inspection? Because we're trying to make sure that the buyer isn't wasting or using funds that they don't need to use. From there, once the appraisal gets ordered, they request to get inside the house from the listing agent, and then they have a certain amount of time to get the appraisal back. Let's say it's 7 days. So the appraisal comes back on that 7th day. The way we work is there's going to be a link sent to the borrower requesting for payment of the appraisal. The appraisal may have been done, it may be back, but the appraisal management company will not release the appraisal to us as the lender until that payment arrangement has been, well, the payment has been made. I say the payment right now, our appraisals are running about $550. Us as the lender, we don't benefit off of that. The appraisal management company and the appraiser split that based off of whatever agreement they have for their compensation. So when the appraisal comes back, I take a look at the appraisal and I'm looking for 2 things, right? 2 things. I'm looking to see if, one, the value is there. So if the house is under contract for $250 and it has to appraise for at least $250 or better. If it doesn't appraise for at least $250, then we go back to the seller to say, hey, this house hasn't appraised for $250. It's at $245. When I say we, let me make sure I'm clear. The buyer's agent that's representing the buyer goes back to the listing agent and they get with the seller to see what they're going to do about the price, so the deficiency amount. The next thing that I look for is as is or subject to. As is means the property has appraised for $245 as is with no repairs. If it is subject to, that means the house has appraised for $245. However, there are some things that need to be addressed before we can put it in as is condition, which means that you can go ahead and use that appraisal and close on the home if everything else lines up the way it should. Now, if it's as is, once again, I relay that information to the buyer and the buyer's agent. The buyer's agent gets with the seller's agent, who are the listing agent, and see what repairs they're going to do to the house, or if they're even going to do the repairs. Now, in that case, the repairs need to be done before we can close on the house. And what happens is once they've agreed to what repairs are going to be made or how they're going to make those adjustments or make the repairs, then we have to order a reinspection. What a reinspection is when that same appraiser comes back out and takes a look to make sure those repairs were made on the items that he or she noted in the appraisal. If those things are clear, they send back, or have been corrected, they send back the appraisal information saying that, hey, XYZ that need to be done is clear. We submit that to the underwriter, and now we have a clear appraisal. So we don't have any appraisal issues. Once the appraisal has been ordered and back, like during that process, after it leaves the setup team, it then goes to processing. The processor is another extension of me as the loan officer, meaning the processor is going to make sure that the documents that you sent are exactly what we need so that she can submit the file to underwrite. The processor reviews everything, and in between the time that myself, my loan officer assistant have taken a look and spoke to you, you may have gotten a new bank statement. You may have gotten another tax return. Your W-2 or your tax returns may have came in because they've been filed, or you may have gotten a new bank statement. She's going to ask for those additional items that may not have been there when we initially asked for them, or it could have been something that we missed, and she is going to request them so that we have everything. The goal in this process is to submit the documents as soon as possible and to have the file go through with least amount of conditions, meaning we want to provide as much information so when we submit it to the underwriter can see exactly the entire picture of, okay, this buyer has the credit score that's required by our program. They've got the income, the house has appraised, they have the money to close, and make sure everything lines up with the guidelines that will allow for the servicer or whoever to back this loan. So the underwriter reviews the file of everything that was given from the buyer and requested of us as the loan officer, and he or she reviews the file. Now, once it's in underwriting, for us, depending on the season and the time, it typically takes 48 to 72 hours, or if it's summertime, it could be a longer turn time. So it gives them time to review the file. Once they reviewed the file, if there's any additional documents or information that is needed, they're not going to reach out to the buyer. They're not going to reach out to the agent. They're going to reach out to the processor, and I'm copied on the email so I know exactly what's required or what information the the underwriter wants for the file based off what he or she has reviewed. Now, once that happens, my processor is going to reach out to the buyer and ask for those items that the underwriter wants. This is key. When the processor asks for documents, get them what they ask for as soon as you can. Because remember, we're on a time clock, and every day and every hour that's delayed with getting us what we need, it could affect your closing date or when you close. So make sure when the processor calls or emails, and if they don't reach you, that you get back to them as soon as possible to go over what's required, or if you understand what they need, please get it to them as soon as possible. And this is key. We cannot accept pictures of documents, and we cannot accept screenshots of documents. It has to be sent to us via PDF or fax to us so we can get it and submit it to the underwriter. Once you have those additional documents that the underwriter is going to ask for, the processor is going to take those documents, look at the documents, look at the list of items that the underwriter has requested, and the processor is going to make sure that we have everything we need before she submits the file. We need everything that we ask for, and I know I'm repeating it, but it's very important that we get what we ask for the exact way that we ask for it, not the way that you think we should receive it. Because we know what our processors and we know what our underwriters are looking for. That way we can get it to them and there's no questions. So once the processor has gotten those documents back from you, they're going to submit the updated documents from you to the underwriter. It goes in the underwriter's queue. Another key thing, no matter what the time frame is, the underwriter and our company, they have 48 hours to review those documents. So we want to make sure that we submit everything as soon as possible. And the 48 hours starts once it's been submitted and all documents have been submitted to underwriting. That means we understand that your file is important, Mr. and Mrs. Buyer, but because the underwriter now has it, doesn't mean he or she is going to stop what they're doing, pick up your file and review it. That's why we're asking for things in a timely fashion, so that gives our underwriter time to review it. So we submitted the docs to the underwriter. They look at the documents, they look at the file, they make sure everything is where it needs to be, everything lines up with the guidelines and everything they requested, and they issue from that point on, depending on, now there's cases where they have something that you gave us triggered them to want to know more information. So they're going to keep digging if the information that was given to us warrants them figuring out, okay, now that I have this, what about this? So there are cases where that happens, but for the purpose of this podcast, in that case, we don't have that issue. We're going to submit it. We look at it. The underwriter says, awesome. Everything lines up. Congratulations. You have a clear to close. Now, what the clear to close means is you are clear to close, but that doesn't mean you're closing that minute. Now, time the underwriter is underwriting the file, there's something called a initial CD, initial closing disclosure, that needs to be sent out to the borrower 3 days prior to closing. Sundays and holidays do not count in that 3 days. So essentially it's Monday through Saturday. Most people don't close on Saturdays. So even though that count as a day, the next day that you could close would be on a Monday. Meaning the closing disclosure goes out and it discloses the entire application and it gives you an idea of how much you're going to need to close on your property. That number is going to be a little different than what you initially saw when I sent you the estimated cash to close worksheet, because we're further along in the process and we have a better grasp of how much taxes, insurance, and interest rates and all that are at the time, right? So once the initial closing disclosure goes out, it has to be signed before midnight. If you sign it before midnight the next day, so if you sign it at 11:59, your 3-day window starts at 12:01. At 12 o'clock. So that means that's one day. And then on that third day, you have the ability to close. In this case, our closing department tries to send the closing disclosures out maybe 7 days in advance so we get an idea. Let's fast forward. So now that we have the initial closing disclosure, which has been issued, signed by the buyer, we have a clear to close from the underwriter. That file then goes into the closing department. The closing department will reach out to the attorney's office to make sure we have a time for closing, and then they're going to do something what I call correlate the numbers. What that means is the attorney's office has done title. They've searched to see if there's any liens, encumbrances, or in judgments, anything against this property that would hinder us from closing. A part of the underwriting process is to make sure we have clear title. So what they're going to do is they're going to take their figures and numbers. They're going to send those numbers to our closing department. Our closing department is going to put it on a CD, closing disclosure, and they're going to put in our figures of what we charge or charges from our side. They're going to take that closing disclosure, and I'm talking about our closing department, and send it back to the attorney's office to make sure they're on one accord, meaning what the attorney's office has for figures and what our closing department has for figures match. Once that happens and the numbers, what they call balanced, we will send that CD, that closing disclosure, to the buyer saying, hey, Mr. and Mr. Buyer, Mr. and Mrs. Buyer, you need to bring, your final numbers are $15,000 for closing, which includes down payment and closing costs, right? In those numbers, and I get this question all the time, in those numbers, you've already been given credit for any money that you've put in. And when I say any money, the earnest money deposit or the escrow deposit, whatever you call it, any credits from the seller, anything that's called a lender's credit. So those things are already credited to you. So when you get the closing disclosure and it says cash from borrower, you've been given credit for all of those items that are in the closing disclosure. So this is your final number. You still review it to make sure that everything lines up on your end, because the attorney's offices and our closing departments are human and we do make mistakes. Something could have slipped through the cracks. Closing credit could have been higher than what we had because of some change during the course of the process. So the buyer reviews it to make sure everything's fine. I review it as a loan officer to make sure we didn't miss anything. And once we have the final numbers, then we take the buyer gets wire instructions. The wiring instructions are for them to take to their bank so they can have the funds wired to them for closing. So the days of bringing checks to closing, at least in my market, are over. So what you do is you take the wire instructions to your bank and you wire the amount that's on the closing disclosure. So for the case of this podcast, it's $15,000. It needs to be wired to the attorney's office. It gets wired to the attorney's office. Your bank gives you a wire confirmation. And I would say, please hold on to that wire confirmation and also bring it to closing, because you want to make sure that your money actually got there. And I would even take it a step further and say, hey, I wired $15,000 to your account. Can you please see if you guys have received the wire yet? Once that happens, and let's say the closing date is today. Let's say it's today, then you go to the attorney's office at the set time. You review all the documents that you've been reviewing, information that you've been sending in. You review and make sure everything is the way it should be. The attorney takes the time to explain to you what's your responsibility as the buyer in terms of this note or mortgage. And from there, once you signed off on it, the documents will be submitted to our closing department. If everything lines up the way it should, attorney's office a funding code. And when funding code means you officially are a homeowner. The seller's gotten their money, the realtor's gotten their portion of the commission, everything's lined up, and you are now a happy homeowner. I want to preference, this process can go smoothly and oftentimes, but just to be transparent, sometimes there's hiccups in the process, simply because every person every file is different, and the way everybody handles their finances or their paperwork is different. Your friend may have had a smooth closing, no problem, but their situation is different than yours. So understand, our job is to make the process as smoothly as possible for you, but there is a chance that there's going to be some turbulence. But you just hold on, and we will navigate you through the process to help figure out the best way to ease out your transition into home ownership. From there, we just want to make sure, I just want to reiterate, to make sure you have your documents in place, your game plan in place, and to do things in a timely manner when requested, because that helps us stay on our guidelines and our time frame. So with that being said, I'm your host, Kevin Jefferson, the People's Lender for the Real Estate Proverbs podcast. Thank you for listening. Do me a huge favor, like and subscribe and comment to this podcast so it can get out to more people. And please share with your friends. If you have any questions pertaining to the home ownership process, no matter what state you're looking to move into, you can reach me, and you can please comment below. I look forward to working with you. Thank you and have a great day. If you like this podcast, please like, subscribe, share, and comment. And I'm your host, Kevin Jefferson. Have a great day.